S&P 500 Complete is your go-to for regular updates on all 500 stocks. Subscribe so you never miss out. Let's jump in. This could be huge for Blackstone investors. The world's largest alternative asset manager just crushed Q2 earnings with a massive 11% surprise, earning $1.21 per share versus expectations of just $1.11. Plus, they're sitting on a record $1.2 trillion in assets under management. Here's YBX at $172 might be seriously undervalued right now. First, their earnings power is exploding. Fear-related earnings skyrocketed 31% year-over-year to $1.5 billion. That's one of their best quarters in history. This is not just a one-time thing either. They've beaten earnings estimates for quarters in a row, showing consistent execution power. Second, the private credit dominance is insane. Their private credit platform has tripled to $465 billion in just 5 years. And they're capturing massive market share in this $1.7 trillion opportunity. With $113 billion in inflows over the last 12 months, they're clearly winning this space. Third, the infrastructure and AI megatrend positioning is genius. They just committed over $25 billion to Pennsylvania's digital and energy infrastructure that's directly tied to the AI build-out everyone is talking about. This single initiative could create thousands of jobs and massive returns. Fourth, private wealth democratization is their secret weapon. They raised $11 billion in the private wealth channel in Q1 alone, up nearly 40% year-over-year. Their BREIT and BCRED products are bringing institutional quality alternatives to regular investors for the first time. Fifth, they have incredible dry powder for opportunities, with $181 billion ready to deploy. They can capitalize on any market dislocations, while competitors struggle for capital. Plus, management is seeing the strongest signs of IPO and M&A recovery. Since 2021, perfect timing for realizations. Now, I have to be honest, there is one major concern that bulls need to watch. The valuation is getting stretched with a PE ratio around 40 times earnings, well above historical norms. More concerning, their debt load jumped nearly 16% year-over-year to $12.5 billion, pushing their debt-to-equity ratio to 1.45, a multi-year high. If markets tighten further, this leverage could become problematic. What do you think? Are you bullish or bearish on Blackstone at these levels? The growth story is compelling, but that valuation and debt load are worth watching.